Good day and welcome to SCO BRICS Insight, where we talk about what's really going on in the world of the BRICS. Now, my name is Rod Mackenzie, and today I'm going to talk about Russia's economy and its trade surplus. Now, for the last 3 years, there's been a constant chorus by the Western media and their politicians that the Russian economy is about to collapse. Yeah, every month there's at least another article from everybody, the Economist, Financial Times, etc. Now, it started back in 2022 with the introduction of the so-called shock and awe sanctions that the then senile old buffoon who was elected the US President, Joe Biden, predicted that the Russian currency, the ruble, would be turned into rubble. Following his outburst, the Empress of Europe, Ursula von der Leyen, declared that the Russian economy would soon be in tatters. Tatters, I tell you, she shrieked in her witch-like hysterical tones. Of course, it was never really going to happen. It was just wishful thinking from the globalists and their useful idiots, and no amount of them repeating their mantra was actually going to make it happen. Now let's look at the reality according to the results of last year. Russia was in third place in the world in terms of having a large trade surplus. The total amount of this trade settlement surplus was $151 billion. So what does this mean for the country and its economy? Well, according to data from the National Statistical Services, China was the leader in terms of having a trade surplus at $991 billion in 2024. Germany was ranked second with its surplus amounting to $258 billion. Russia was in third with its trade surplus, as I said, $151 billion. And it was followed by Ireland at $98 billion and the Netherlands at $89. And they were the fourth and fifth places, while the top 10 countries with the largest trade surpluses also included Switzerland at $77 billion, Saudi Arabia at $73 billion, Norway at $69 billion, and Brazil at $59 billion, with Italy following up at $55 billion. Now, it's noteworthy that in a single year, Russia has gone up 4 positions in the rankings. According to the results of 2023, Russia's ranking was 7th, with a trade surplus of only $121 billion. Now, before I continue, I'd like to make an appeal. If you like and enjoy my videos, you can help me fund the channel and my website, SCOBRICSInsight.com, and you can do this by making a small donation, which is done by clicking on the thanks button at the bottom of the video screen. Every donation does get a personal thank you from me, and I'm also thanking you now for watching. Also set the alert button so you get notified when I post a new video, and also keep the comments coming as I love to read and respond to them. Now, in the matter of trade deficits, the United States recorded the largest one in 2024 with a value of $1.3 trillion. In not so Great Britain, the figure was $303 billion. India was in third place with a deficit of $263 billion. France with $111 billion and Turkey $82 billion made up the top 5. Now, in general, it's advisable to try and avoid deficits and instead focus on generating a trade surplus. It's beneficial to a country to produce sufficient goods and services to not only meet its own needs but sell the surplus to other markets, thereby generating revenue. I mean, when a deficit does occur, the country's national debt increases because more is bought than is sold, as the case with the US, according to Ekaterina Novikova, who's associate professor at the Department of Economic Theory at the Plenkinov Russian University of Economics. Now, everybody knows Russia is a country with significant natural resource deposits. I mean, it sells large quantities of oil, gas, coal, metals, and various other commodities. Consequently, the country's trade surplus is not exactly unexpected. I mean, since 2022, Russia received a significant number of orders also for domestically produced goods, including those for mechanical engineering, nuclear energy, electronics, space, and military developments. Now, this is due to the country's strategic focus on the Asian market. Specifically last year, the total value of Russia's exports to Asia was $329 billion, marking a 7% increase compared to 2023. Now, it delivered products to Africa worth $24 billion, representing an increase of 14.7%. Now, the volume of exports to Europe was lower and it amounted to only $68 billion, and that was a decrease of 20%. Now, at the same time, Maxim Chirkov, who's a professor of economic policy and measurements at the State University of Management, has stated that the discrepancy between the growth of Russian exports and the development of imports can partially be explained by the difficulties with imports to Russia due to sanctions. So, while the option to procure goods and services from external sources exists, it's not exactly straightforward or currently cost-effective. So while a trade surplus is generally beneficial, it's not the sole determining factor for economic performance, of course. It's also important that neither is a trade deficit, the issue in economics is much deeper. For instance, take the experience of Germany, a country with a traditionally high trade surplus, that demonstrates that even a significant trade surplus doesn't guarantee high rates of economic growth. Germany's trade surplus in 2024 was $241 billion, but at the same time, the German economy demonstrated almost zero growth rates and actually being in a state of technical recession, according to Evgeny Smirnov, who's Professor of World Economy and International Economic Relations at the Russian State University. Now, the situation is entirely different, of course, in the United States. It always is. Now, it's evident that that nation has been experiencing ongoing trade deficits for a very long time. The United States trade balance is constantly in the red, with the value of goods and services sold falling short of the value of goods and services that it imports and purchases. However, due to the dominant global position of the American dollar, the deficit in the United States is financed by the national debt borrowing. It sells treasury bonds and people buy them. The United States borrows money from foreign creditors, or it allows foreign investors to invest in American assets, according to Smirnov. Now, this economic model has been developed by the United States and it works for it. The influx of capital in the country is being driven by the mass trade deficit, that's the only reason for it happening. Despite the periods of significant trade deficit, the US economy has consistently in the past demonstrated robust growth rates when benchmarked against some other developed countries and economies, like parts of the EU, for example. Now, this is largely attributable to the unwavering confidence of foreign investors in the US market, and particularly its treasuries. Now, it's been suggested that the increase in dependence on imports may result and has resulted in this deindustrialization, where the domestic industry of a country with a trade deficit will be unable to compete with imported goods, which is what we've seen in the US. But that's not always the case, according to the analysts. So therefore, in addition to trade surpluses, deficits, it's necessary to take into account the socio-economic model of a given country. If its export orientation is dependence or its imports of individual goods, then the nature of the debt burden on its economy and the state of the public finances as public budget deficit or surplus is taken into account. All those factors combine to form the current state of the economy and are not always that interconnected. The most evident of the outcome of a surplus for the population is the strengthening of the national currency. We see that with the ruble, which is evidently happening as it's gone up. Since the beginning of the year, the ruble's strengthened and appreciated against the dollar by 20%. And it's currently going to hold at that level for some time, as expected. At the same time, of course, the trade deficit has a potential to weaken the national currency, and that leads to higher import prices and inflation. You can see that is what happens in the UK, for example, or in other parts of the Eurozone. Now, when you're discussing the economic situation in Russia, though, it's important to note that Russia, like many others that export raw materials and processed goods, has a surplus of payments in its budget. And that approach has both advantages and disadvantages. In principle, a surplus is obviously preferable to a deficit. But countries with a budget surplus tend to have experienced robust economic growth, a highly attractive labour market, and a wide range of lucrative investment opportunities. Such a country is normally quite self-sufficient. Conversely, a surplus may also be indicative of an excessive tax burden and inadequate funding for its social sphere and introducing innovation, as sometimes is partly the case with Russia. And because there are limitations on import purchases, for example. In any event, it should be noted that there's no universally applicable ideal trade balance for the economy. However, it must be said that it's essential that Russia consolidates its current achievements with import substitution and development and address some of the shortcomings that have been advised. Now, it's interesting to note that in 2024, only 33 out of 91 countries worldwide were able to achieve a trade surplus. Collectively, these countries generated 2.3 trillion in trade surplus revenue. A total of 50 economies worldwide recorded a trade deficit, resulting in a combined shortfall of 2.8 trillion. So in the final analysis, it's more challenging to earn than spend. By the way, the majority of that 2.8 trillion was the United States. Now, thank you for watching. Please like and subscribe. Also share with others who might enjoy the videos. And if you want to make a donation, click at the thanks button at the bottom of the video screen. Thank you, and I'll see you all again soon.